guys, welcome back to RoyalT Empire Education. And for those who don't know me, my name is Tyrone.
What's up?
We are in a series learning about option trading in the stock market. In our last video, we talked about what is the basic information about option trading and how it is beneficial for you to know this information. If you have not seen that yet, you can go check it out in our YouTube channel and it will be listed there for you. As I said in my previous video, option trading can be used in a lot of different ways. There is a long call, short call, long put, and short put. So today we will talk about what is a long call and how it works. Every option trade that you make, there are three things that you can see every time. There is a strike price, expiration, and premium. The strike price is a price where a contract can be exercised before the contract expires, and the premium is a price you pay to own the contract. The long call is a contract that gives you power to buy at a strike price. This means that you buy a contract, and when you exercise what it says, the seller is obligated to sell it to you. This option is used when you speculate that the stock market share price will be going up. For example, Company A has a share price of $25 and your prediction is that it will go up. So instead of buying 100 shares for $250, you can buy an option that is $1.40, which is $140 of premium with a strike price of $27 per share. You might be asking a question of how do they come up with the premium price? I'll talk about that in my later videos, so stay tuned and hit that notification button. For now, we're gonna keep it simple by paying $140 for a long call option contract. This contract has an expiration date that will last until next week. This option trade that you just did can go in two different directions. It might be favored to you or the seller of the contract. If the price goes up, then it's definitely favored towards you. At expiration date, the share price has risen to $32 per share. This is when you exercise your contract. Since the strike price is $27, the seller has to sell it to you at that price. This means that if you take $27 strike price and multiply it by 100 shares that you will be buying, you will spend $2,700. But since the current price of the stock is $32, you can sell it back at $3,200 with your 100 shares. This means your net profit would be $500, subtracting the premium of $140, which results to a total of $360 of net profit. Another way that you can make money is you can resell your contract at a higher price. When you buy a long call contract at a certain premium price and the stock price goes up, the premium of that contract will also go up and you can resell it and make profit. This is a great way to make money for those who cannot afford 100 shares of a company. For example, I have bought a contract with a strike price of $45. The premium was $2.30, also can be seen as $230. It will expire next week. The price of that share during that time was $43. So I have not made any money yet. If the price of the stock goes beyond $45, the premium would rise to $3.30, which is $330. So you bought a contract for $230 and you sold it at a higher price of $330. If you take $330 and subtract it to $230, your total net profit would be $100. The profit of doing this trade might not be as big, but you can still create an income. This type of contract is one of my favorite out of all the four. I used some of the patterns that I showed you in my previous videos to speculate an uptrend. When I started to learn more about option trading, the harder it was to understand. But I was really interested in the idea of leverage because I did not have a lot of money. At first, I started to gain a lot of money, but I only knew the basic knowledge. There were some key factors that I have not yet learned. Those key factors brought me down big time because while option trading can give you a lot of profit, it can also give you a lot of loss. Today we talked about what is a long call contract and how it works. I suggest that you should wait and learn more about option trading before you decide to jump in. It may be simple, but I do not want you to lose a lot of money like me. Subscribe and like if you want to learn more about stocks and investing. And if you have any questions, comment down below and I will gladly answer them for you.